What's up, my fellow traders? Hope you all having an awesome day. A quick one here on nat gas, gold, silver, crude oil, starting with natural gas. And what a move we have got right here, a second winner in a row. Nat gas is so far, I would say, a winner of the year, as we had one winning trade right here that was sent to my members, and we had another winning trade that is a double top pattern that I've personally taken, not sent to my members, because it is, like I said, it is not a signal group. For you to learn these entries, look for the exact same entries. If you are a member, you can always come back to me, ask me if that's the right entry or not, so that you can become an independent trader. So a good move out of natural gas has nicely pushed the price higher. So let me show you what I've said in my last video so that we can connect the dots from there. So let me give you some confirmation conditions. If that candle turns out to be a red candle, now that still be a valid double top if that closed as a red candle, not an engulfing candle. But in this scenario, that will be a risky double top. If you are a risky trader, it's totally up to you if you want to enter this trade by keeping your stop loss above the zone and go 1-to-1 initially for your take profit. Expect a rejection from 50 EMA, and then a possible continuation. 1 ATR can be your initial target, 1 ATR stop loss, 1 ATR take profit, and you can manage to 1.4 to 1 reward to risk ratio. And I also want to point out a divergence where, as you can see, the price is making higher highs, bearish divergence as well. Now coming back here on Ovanda, we have an aggressive double top looking at the first top, second top with the 382 candle right here, the inverted hammer or 382 candle, which is whatever you want to call it. That is what we call a valid double top aggressive. I'm expecting a price to push down from here, at least 1 ATR for the initial target. That looks something like this. Let's say you've entered right here. ATR of this candle is 8. That is quite high here on nat gas. Right here, the initial targets look something like this. For the bigger targets, I'll keep my stop loss above and take profit. I'll go initially 1-to-1, something like this. Perfect. That is what we call patience and taking your trades with condition, with the power of patience. We waited for the price to come back up or come back down here to buy, to sell from this double top clearly mentioned here. And if you're trading on NEMIX, perfect double top evening star pattern. If you have not seen my video how to trade evening stars, feel free to check my videos how to identify multiple candlestick patterns. It's in my playlist. So now I've also mentioned that we are getting a divergence in the RSI yesterday. What divergence means? Means we are getting a weakening in momentum. The momentum has been weakening with the double top, with this divergence, evening star, double top, so many sell signals. And that confirms the bearish confirmation as well. And I hope you got a value out of my daily analysis. If yes, do not forget to pause this video and let me know in a comment section, or just hit the like button for me. And if you come back on a daily time frame, you're looking at a weakening in momentum. Look from here, right from 4th of October, price making higher highs. And if you look at the divergence, is making lower highs. So that is why we can see some pullbacks from here that is expected. So I'm also considering the fact of divergence in the RSI. What to expect next from here? We have multiple conditions on all three platforms. We are looking at the entries accordingly. So first, we are looking here on NEMIX. On NEMIX, we are looking at 50 EMA first. So on NEMIX, I won't be looking for a bullish engulfer here. In general, it invalidates one of my rule. If you are my student, you know what rule is that. So I won't be taking it as an entry if we have a bullish engulfing pattern right here. But let me give you a general condition. If we have a bullish engulfer, that can still push the price higher in general, just rejection, and that can still push the price back to this zone. So that is a what condition you can look for a possible bounce out of 50 EMA. That is likely. Again, I won't be taking it as an entry. It is just a general condition. If you have your own strategy using 50 EMA, then expect a bounce out of 50 EMA. If we have a strong bullish engulfing pattern above 50 EMA. Otherwise, personally, for my entries, I would be looking at the zone below, which is 2.905 goes to 3.019. If the price comes down to my zone, it is an only area from where I want to enter my buy trade with bullish engulfers, or double bottom entry pattern is my area to take my trades. Now, if the price pushes down and break below 50 EMA, in that case, I'll start to look for my short-term bearish pullback trades. Pullback bearish engulfer, we're going to keep on taking shorts till we are here. Look for the next buy condition. So it is my next buying area. Otherwise, I won't be looking for any buy trades. I'm expecting a further push down if we are broken below 50 EMA and close as well. So keep an eye. If you have closed below, we are looking at this area, and then we're going to start to look for the pullback entry bearish till we get an entry condition here. I will be buying here, or I'll be only buying once we are broken above these highs. So it is another pullback in an uptrend. That is how the price action goes in an uptrend if you look from all the way from where the uptrend started. Now I'm going to show you the price action carefully. When the price hit the level of support, it pushes up, capture your profit. Pushes down from the level of resistance, capture your profits. Then it breaks above this level, right? After some rejections. Break above this level, we are looking for your entries right at this area, which we did not get. So we are broken above, the bullish pressure is strong enough, then we are broken above. Now what happened is, we had a support area right here and right here. So we have two level of support because the price has broken above the resistance that has now turned a level of support. So either we are looking for the entry here or right here. I'm just talking about a price action in an uptrend. That is why it is very important to understand that. So once the price break above the level of resistance, it pulls back, double bottom, break above, looking for your entries here. Instead of bearish engulfer, what do we have? We had a head and shoulder pattern, right? And that pushed the price lower again to the recent level of support, a major support that has been broken. So see how nicely we are getting a condition with an entries. Then we had a nice double bottom here, broke above the support resistance, hit the next level of resistance, nicely pushed down with this bearish engulfer, push down, bullish candle here. On the other platform we have the bullish engulfer and double bottom as well on a smaller time frame. Break above, nice entry condition here on a smaller time frame. That was an entry we have already taken the targets, and then after that the price pushes up. Now that is how the price action goes. If we have a push down again, another wave we can call, these are all the waves. Either we can get a possible break after the next wave right here, or we can get a double top on a daily time frame. The price push down and then push up. So that is how the price action goes. So in general, as you can see, we have a bearish engulfer on a NEMEX platform that also shows a good bearish pressure. Right here, a bearish engulfer. That is why I'm looking at this level below for the possible pullback and a push back up. On 4-hour time frame, nice double top pattern. As you can see, first top, second top, and from there we can see another bounce up. So for now, in general, just look at this level for the possible bounce out of. Once broken below, we are looking at bearish trade short term. So buy a trade from here and buy a trade above this high. On capital.com, I don't want to go through every single thing again, but in general, we are just looking at 3.031 goes to 3.119, from where we're going to start to look for the possible bullish engulfers or double bottom entry pattern. So in this platform on capital.com, if you are trading, I know most of you are trading on this platform. Here, we can soon get a possible condition. Once we have that, we're going to go long. For now, we are broken below 50 EMA. We are good to take a pullback. If we have a pullback, valid pullback with a valid bearish engulfer, I'm going to go short till here. Look for my entry condition from the zone below in green. So next buy will be here or above this high. On Ovanda, where I personally take my trades, right here, a target has been hit for me. First target was 70 points, the second target was 150 points. That's good enough for your targets after second winning trade for me. Now, simply once we have broken below 50 EMA, I want to see one more candle below 50 EMA, then a pullback, then a bearish engulfer. And then I'm going to go short till we are in the level below, which is right here is 2.731 goes to 2.805. If you are a member, then I've already mentioned these zones, as you can see in green, for the last week's report. And a week before that, I've already mentioned this zone above from where the price is nicely pushing down. So you see how nicely the price action is pushing down technically from the level of resistance right here. We have pushed down. Now we're looking at the level of support, which I've already sent to the members, to the students, and of course you guys on YouTube as well. So keep an eye on this level. Once we are in this level, we are looking for the possible double bottoms or bullish engulfing pattern. Next up, what do we have here on gold? Gold is still ranging sideways, so I'm not looking for any possible entries here on gold. If you're wondering, that turns to be a bearish engulfer. That is not one of my valid pullback bearish entries. So I'm going to skip that. I'm only going to enter my trades once we are broken below these lows, then with a pullback and a bearish engulfer. Now, if you're wondering, that is not one of my valid bearish engulfing entry. Not even that. If you are my student, you know the rules of that. One of the rule is not met here. So that is why it's just a range, broke above. Another bearish candle here. Again, not my valid bearish entry. So simply either a break below this low will confirm my entry condition to the downside, and I'll be looking at the level of support, which is down here. Let me remove this mess here. So level of support is right here. 2515 goes to 2537, from where I will be looking to enter my buy trade is the next level of good support from where we're looking for the entry condition. Otherwise, if we are broken above 50 EMA and close above with a solid momentum, then we are looking at this level here for the price to possibly push up to right to the numbers in blue, from where we can see another rejection out of. So keep an eye. This area is an area from where we can see a rejection, but for now we have no entry confirmation. But if we have a good momentum above 50 EMA, we can look for the short-term bullish pullback entry till this area. Ideally, I want to see my buy trades above these highs. Here on silver, we are now getting closer to the double bottom area, which is right here. 29.66 goes to 29.82 here on Owanda. Once the price hit my double bottom area, I simply want to look for my bullish engulfer or my pin bar or 382 candle. Once we have that, we are good to go long. Keep your stop loss below. Take profit. You can go 1 to 1 or manage to 1.4 to 1 reward to risk ratio. If the silver started to bounce up from here, it will likely push the gold higher as well. So that is why conditions are only happening here on silver, and I'll be only looking for my entries on silver once we have a valid buy condition. So keep an eye. Only buy trades once the price hit my rejection zone, which is right here. These numbers in blue is my rejection area. Possible entry right from this area and expect a possible bounce from here. Now, if we are broken below these lows, we have a strong push down, no entry condition, then the price of silver will dramatically push down in that case. That is likely. Lastly, we have crude oil. It's nicely pushing down. If you have seen my last video, I've said that we have a bearish engulfer happened on a daily time frame. Right here, if you would have entered right here, that would have hit your take profit with a pullback. If you know me, with these big candles, I always enter with my Fibonacci retracement. If you are my member, then you know that recent trade we took on nat gas exactly like this. Right, a 50% retracement, exactly how that happens. That is the power of learning the right rules. With that nicely pushed down from here, and this push down is around $2.2. That is good amount of profits. Now, I'm still looking at this possible level right here, 65.38 goes to 66.88 for the possible bounce out of. But on a high time frame, I'll be looking at a possible double bottoms as well, which is right here. That is a separate zone for the double bottoms. Make it prominent. If the price pushes down, it is something I'm talking about on a daily time frame. Push down forms a bullish engulfer or a green candle that will likely to become a valid big double bottom, and that will likely to push the price high. So keep an eye on this rejection box for your possible entries. For now, for crude oil, not one of my valid pullback bearish entry, but in general, we are getting a cross and a bearish candle that can still push the price lower to my rejection box, from where we can start to look for the next possible buy trades. So that's it for commodities, guys. Hope you got a value. If yes, give this video a thumbs up. Subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Till then, take care.